Kelowna real estate prices are down from this time last year, with the price of a single family home dropping 5% year over year and the price of a condo coming down 4% over the same period. Overall, prices are down significantly from the peaks that we saw in 2022 and 2023, but more recently, prices have started to stabilize. It feels like we've had more of what would be considered a market correction instead of an all out real estate market crash. At least when it comes to prices, that is. The number of properties sold has certainly crashed from this time last year, but prices continue to hold on. In this video, we'll take a look at what my local real estate market of Kelowna did last month and what you can expect to pay for a typical home in the area. And make sure you stick around until the end, because I'll let you know if I think there's still the possibility of seeing an all out market crash. I'm Tyrell Boake, a realtor in Kelowna, and on this channel, I help you navigate the real estate market and provide you with useful information so you can make informed decisions that make sense for you. If you'd like to stay up to date on my local real estate market, make sure you hit the like and subscribe buttons so you don't miss out on future videos. And whenever you're ready and you'd like to book a call with me, you can hit the first link in the description to book a call with me at a time that works best for you. The Kelowna real estate market has seen a dramatic drop in the number of properties sold this year compared to the same period last year and the year before, but in most recent months it seems like property prices continue to hold on. It's as if there's a standoff happening between sellers who still want the market to be the same as it was in 2022 or 2023, and buyers who are looking for prices to come down as well as interest rates to come down, or in a lot of cases, both. With interest rates coming down now and the Bank of Canada lowering its overnight rate 3 times in a row, some of those buyers are getting their wish of lower interest rates and they're re-entering the market, and that could increase the number of sales. But let's take a look at what's going on in my market right now. As I mentioned, the number of sales is down significantly from what we saw in 2023, and you can see that sales overall year to date are down 12% from what we saw a year ago. Last year in the fall, you can see that sales did decrease after the two Bank of Canada rate increases in June and July, but we've had 3 consecutive Bank of Canada rate decreases this year, and it hasn't significantly impacted the number of sales yet. Typically, we see a quieter fall market in the Okanagan compared to the summer and the spring, but I'm really curious to see if this most recent rate decrease has an impact on the number of sales, or if we'll continue to see that decline as we go into the end of the year. Inventory continues to be strong, and it's in fact 37% higher than it was this time last year. We have just over 4,000 active listings in the area. The benchmark price of a single-family detached home in Kelowna for August was $1,018,000, which is down 0.7% from July, which was $1,025,000. Not really a significant dip in prices, but it is a decline month over month. If we look at that same price over this time last year, you can see that the benchmark price is down 5.3% year over year. Taking a look at the single-family detached home benchmark price over the last 3 years, you can see that we had a peak in the spring of 2022, as well as a peak in the spring of 2023, with the price now being down 13% from what it was in 2022 and 5% from what it was in the spring of 2023. However, over the last 6 months, the benchmark price of a single-family home has grown 4.7% from the bottom that we saw in December 2023. Taking a broader look over the last 5 years of the benchmark price, you can see that our prices are roughly back to the same level that they were in the fall of 2021. Moving on to the townhome market, the benchmark price of a townhome in August was $723,000, which is down 7.2% from the month before. However, in July, that price went up 8.7%. Year over year, though, you can see the benchmark price is down just under 8% from $784,000 in August of 2023 to $723,000 in August of 2024. The same pattern emerges when we look at the benchmark price of a townhome over the last 3 years. You can see that there were 2 bubbles and there was a steady decline into December 2023, with the price jumping around quite a bit in 2024. It seems like in the townhome market we jump month to month, and I do think that volatility in there is the market just adjusting to people's expectations. That market can remain strong, as I mentioned last month, because anyone in a single family home that's looking to downsize could be jumping into the townhome market, as well as anyone that's currently in a condo looking to upsize. It's a natural landing spot for both those types of buyers. So I think we're going to see some resistance to that price going down or up as people come to terms with how the market is. If we go back out over 5 years in the townhome market, you can see that prices again are basically back to the way that they were in the middle of 2021, but they are up significantly since 2019. The condo market surprisingly saw the benchmark price in August go up 2.4% from July to just over $500,000. That price, however, is down year over year 4%, where we were last year at $528,000, we're at $505,000. And if we look at the benchmark price graph over the last 3 years, again, you can see those two bubbles that we saw in the market, but more recently, you can see that there's been some consistency in the price of a condo, and it hasn't gone down dramatically since about December 2023. If we go back out over 5 years, you can see that the price has grown over 5 years, but the price today is back to roughly where the price was in the middle of 2021. If you've watched my market updates before, you know that I like to lean on the benchmark price because it's a more accurate depiction of actually what's going on in the market and isn't affected by large or small sales, much like the median or average price would be. But this month, I'd like to take a look at the average price of a condo because I think it is telling us something else that's going on in the market that may be missed when we just look at the benchmark price. If we look at the average price of a condo, you can see that it dropped 3.2% from July to August. August came in at $460,000. One of the reasons I think that this is happening is we're seeing more condos on the lower price range selling right now as first-time buyers are getting into that market. We're not seeing a lot of high-priced condos selling right now. It's more stuff in that $300,000 to $400,000 to $500,000 range, which is bringing down the average price. If we go out over the last year, you can see that the average condo price is down 6.7% from this time last year. Looking at the average days to sell, you can see that the average single-family detached home will sell in about 57 days, which is up from the month before. Townhomes will take on average 59 days, which is also up from the previous month, and condos are taking on average 45 days to sell, which is about the same as it was the month before. The price ratio has dropped from 96% in July to about 95% in August. This means, on average, homes are selling for about 5% less than the asking price, which means that buyers are getting somewhat of a deal off that list price. And if we look at the months of inventory, you can see that we are firmly in a buyer's market in all asset classes, having basically 10 months of inventory across the board. This means that, on average, 1 out of 10 homes is selling every 30 days. Last month, I wondered if the possibility of a market crash was over, or if it was more like a market correction and it had already passed. It certainly looks like it for single-family homes, where we've seen prices stabilize and actually go up over the last 6 months. We do have 10 months of available inventory now, so that will put some downward pressure on prices, but I don't think we're going to see anything much more significant than the 13% that prices have come down since March of 2022. And now, with interest rates dropping and more positivity coming back to the market, we could see a slow move back to a balanced market. And as I mentioned last month, I do think that the months of inventory number in single-family homes is inflated. There are still a lot of sellers out there who are thinking that the market is still the same as it was in 2022 and 2023 and pricing their homes high, and those homes are just sitting, they're not selling. Homes that are priced for the current market are selling much quicker, just not at the same price as they were last year. Condo prices in Kelowna are a different story though, and as we could see from the average price, prices are still correcting and there's still more room for them to come down. There's such a gap between the average price and the benchmark price that the benchmark price should come down and continue to come down as we move towards the end of the year, probably as early as next month. Condo inventory is up 50% from this time last year, and that should continue to put pressure on prices to come down, especially with investors leaving the market because of the new residential tenancy rules and regulations for tenants, as well as restrictions on short-term rentals. Do I think we'll see an outright crash in condo prices? I'm not so sure, but condo prices will continue to soften and correct. All that being said, if you're looking for an outright crash in the real estate market, I don't think it's very probable that it's going to happen unless we stay in a strong buyer's market for the next 6 to 12 months. Sellers are slow to react to market changes, but a lot of them may choose to wait until the market picks up again before they list their product for sale. If they have a listing currently right now and they decide to take that listing off the market and wait for the market conditions to improve, that could cut into the inventory levels as well and help move us towards a more balanced market. Plus, with interest rates now coming down, buyers' purchasing power is increasing and a lot of buyers are re entering into the market. These two factors could push us closer to a buyer's market where there is price stability. The Kelowna real estate market hasn't crashed yet, and it's not very probable that we'll see that happen anytime soon. People want to live in this community, and our population continues to grow, and those people need a place to live, which continues to support our real estate market. If you're still waiting for the market to change before you buy your next property, let me know in the comments below what you're waiting for or what you're hoping will happen before you make that next purchase. Thanks for watching. We'll see you next time.